Today, we are digging into one of the biggest stories in modern finance. It's all about how Goldman Sachs, starting back in 2019, completely flipped its strategy and, well, delivered some truly jaw-dropping results. Let's get right into it. All right, let's just kick things off with the headline number, because honestly, it's a stunner. Plus 341%. That's the total return to shareholders Goldman has delivered since they laid out this new game plan 6 years ago. It's a number so big, you almost have to see it to believe it. And that, right there, is the big question. How does a titan like Goldman Sachs pivot that hard, that successfully, and create that much value? Well, that's what we're here to break down. We're going to walk you through the strategy, how they pulled it off, and what they've got their sights on next. Okay, so our story really begins with the plan itself. And you have to understand, this wasn't just some minor tweak or a small course correction. This was a ground-up rethinking of the entire business, and they laid it all out for the world to see. So picture this. It's 2019, and for the very first time in its entire long history, Goldman holds an investor day. That alone was a huge signal that something different was in the air. They put this brand new strategic path on the table, and it really all boiled down to one key idea. And that idea was something they called durable revenues. In simple terms, Goldman decided it wanted fewer speculative home run swings and way more consistent, reliable base hits. The whole goal was to build a business that wasn't so dependent on the crazy highs and lows of trading, but instead relied on stable, recurring, fee-based income. It was kind of like they decided to stop being a high-wire act and start building a fortress. And wow, did they execute on that shift? Look at these numbers. Those stable, durable revenues, they more than doubled. That creates a much, much more predictable foundation for the firm. And at the same time, they just slashed their riskier investments by over 90%. So the key thing here is they didn't just talk about change, they actually did it, and they did it decisively. So the strategy sounds good, right? More stability, less risk. But did it actually make them more money? Well, let's look at the numbers because they really don't lie. First up, earnings per share. This is basically the bottom line profit for every single share of stock out there. It leaped from just over $21 back in 2019 to a projected $51 in 2025. That is a huge, huge increase in pure profitability. Next up, let's talk return on equity, or ROE. The best way to think about this is, for every dollar of shareholder money they invest, how much profit are they making? By 2025, they're on track to hit 15%. Now, hitting that mid-teens target is like a gold standard in the banking world, and it looks like they're going to nail it. And here's the real kicker. They didn't just get better on their own. They smoked the competition. Their long-term shareholder return of 57% is significantly higher than the average for their peers. This proves they weren't just riding a wave that lifted all boats. No, they were sailing a faster ship. So we know the plan worked. We see it in the numbers. But where exactly did all this growth come from? Let's pop the hood and take a look at the two core divisions that really power this whole firm. The whole business really comes down to two absolute powerhouses. On one side, you have global banking and markets. This is the classic Goldman Sachs you probably think of. Mergers, acquisitions, trading floors. And on the other side, you've got asset and wealth management, which is all about managing gigantic pools of money for the world's wealthiest people and institutions. So that global banking and markets division, it's just a beast. I mean, think about this. #1 in M&A advisory for 23 years straight. For more than 2 decades, if a massive global deal was happening, there was a very good chance Goldman was getting the first call. They also lead in equities and are a powerhouse in FIC, that's fixed income, currencies, and commodities, all while hitting record numbers in financing revenues. Just dominant. And then the asset and wealth management side is every bit as impressive. They've become a top 5 global manager. And get this, in the world of alternative investments, they raised a mind-boggling $115 billion in a single year. And that last point there is so important. They narrowed their focus. They got out of things like consumer credit cards to double down on what they do best, serving those core, ultra-wealthy clients. It's a perfect example of that durable revenue strategy in action. The CEO, David Solomon, really said it best. Growing revenues by 60% while delivering that incredible shareholder return, it's just a massive validation of the path they chose 6 years ago. And it perfectly sets us up for what's coming next. So after pulling off this huge transformation, you have to ask, where does a company like Goldman go from here? Well, the answer, in 2 letters, is AI, and they have a name for it, 1GS 3.0. You see, their internal motto, One Goldman Sachs, has been on a journey. It started with 1.0, which was basically about making sure every client had access to everything the firm could offer. Then came 2.0, which was an internal push to break down the walls between different departments. But 3.0, this is a whole new level. It's about using artificial intelligence to completely rewire the operating model of the entire bank. And look, this isn't just tech for the sake of tech. The goals are super clear and super practical. They're using AI to give clients smarter, faster insights. They're using it to automate tasks and make their own people more productive. And of course, all of that helps drive profits. But maybe most important of all, they're using AI to build even stronger systems to manage risk. It's really about embedding intelligence into the very core of everything they do. All right, let's wrap this up by looking ahead. What are these specific tailwinds that Goldman sees on the horizon? What are the key catalysts that could power this next phase of their growth? They're really looking at 4 main drivers. First, as we just talked about, is putting AI and innovation right at the heart of the firm. Second, they're expecting a big pickup in deals led by private equity firms, which is just fantastic for their advisory business. Third, and this is a great sign, their M&A pipeline, the backlog of future deals, is the highest it's been in 4 years. And finally, they're hoping for a more stable regulatory environment, which basically gives a giant like Goldman clearer skies to fly. So that brings us right to our final question. They've proven their strategy works. They've delivered incredible returns. Now, by putting artificial intelligence at the very center of their next chapter, is Goldman Sachs setting itself up not just to lead, but to fundamentally redefine what a financial firm even is in the 21st century? It's a pretty fascinating thought to leave you with.